We are going to continue on Art's point, actually, because my next guest says the decade has allowed asset bubbles to form, and it is dangerous for everyone. Economist Harry Dent is with me now. Harry, welcome. I'm sure you just heard Art Laffer's comments. I want to know where you see the most danger, that is to say the biggest asset bubble that is going to burst and cause investors pain.
Well, the biggest bubble in the world is China. Their stock market, and even more so their real estate market, greater than any bubble in history, 27% vacancies, and it's only starting to slow. When the China bubble keeps bursting in stocks, Chinese investors will feel less speculative and they'll pull back, and then their market will go down and their investments around the world will. But there's bubbles everywhere. Real estate around the world, stock markets everywhere. Commodities have largely burst, even gold of all things. So the bubble is starting to burst, and we're seeing huge divergences now in the stock market, which says to me this stock bubble, the third one, after each stock bubble has gone higher, each crash has brought us lower. So we're getting ready to see the worst crash we've seen in our lifetime, or at least since 1931 for the year. I think 2016 is going to be the worst year, and the Fed is tightening too late. They should have done it when the economy was stronger. It's already weakening, and they're only going to add.
Okay, but hang on, Harry, because you just made a pretty big proclamation. You said we're going to see the biggest stock market crash next year, or in 2 years, than we've seen since the 30s?
Yes, for a year. The biggest stock crash was 1929 to 32, and this will not be quite that big, but I think in 2016 you'll see the worst of the next crash, and we could see 50–60% down just the next year and 70% into early 2017. I am predicting a Dow of 5,500 to 6,000 by early 2017. Each bubble crashes more, and each bubble burst crashes faster than the last one. So I think people are going to get caught by surprise.
6,000, Harry, by 2017. Yes. That's what you're saying?
Yes. Yes.
Okay. And this is because where is it going to start? I know that you've written in the past about high yield debt, and we did see with Third Avenue Management some signs of distress. What's going to kick this off in your view?
Yeah, well, everything. We see the economy slowing just as the Fed tightens. They usually tighten when the economy's over-bubbled. We see the China bubble in stocks went down 42% in 2.5 months. That's the same thing the Dow did in 1929 before the government propped it up, and the China's government is propping up the stock market now. That, I predict, that China rebound will not last past late January, and we'll see another big crash in China, and that's going to trigger around the world. Germany has worse demographic trends, which is my specialty, in the next 7 to 8 years than Japan did in the 90s, and we predicted alone in 1989 that Japan was going to crash while the rest of the world boomed because baby boom trends were so different in Japan and so strong in the United States and other countries.
Harry, we're writing your words down. We will remember them. I'm also particularly concerned with what you said about China. It makes sense, and Janet Yellen really seemed to evade this question about emerging markets economies today.
Yes.
Harry, thank you. Harry Dent.
Thank you.
Joining us there, economist. He's talking